Hey everybody, it's Pete Carmasino here at Chaikin Analytics. This is the halftime show here on StockCharts TV. Each and every week we kind of go over the power gauge, the system itself, the gauge. We did a very informative view of sort of an in-depth dive of the power gauge a few weeks ago. And today we've got just some signals that are popping up on ETFs. Now, on the ACP platform, the ETF signals are not delivered, but I can show you what they look like. They're very similar to the stock ones, but they don't have all of the characteristics of the stocks. But remember, our ETF rating, think about this, our ETF rating is derived from the underlying stocks inside the portfolio. So what that means is obviously an ETF, again, a US equity ETF specifically, we have the components of those funds. It's basically like a portfolio. So we take an aggregate view of the power gauge rating for each name inside those US equity ETFs. So I do have some different ratings here that are coming out on some fixed income ETFs. That's purely a technical rating, but we can still show you sort of the difference of how they work. And we're going to look at some other names as well. But first off and foremost, talking about the market here, it's coming off a pretty solid week. We tested support and held. We talked about this. I'm going to go over that chart again as well about where we were as far as being at the support and resistance levels, and that support area kind of held up. It's a longer term trend line. I'm seeing a lot of people draw it already today. Everybody sees it, but we'll look at it anyway because we talked about combining the trend lines and looking at the bullish percent on the three big indexes, and let's see if they increased. So we'll look at that. We're going to look at the bullish percent on some the individual sectors as well. So a lot going on here. We're going to get this going. I'm going to get it all in today. I'm not going to run out of time, I swear. So let's jump in and take a look at these charts. All right, folks, we're here on the ACP platform, and this is the chart I was referring to. We had looked at the areas of rallies, right? And I was calling these bear market rallies because that's kind of what they were. And then we just saw a development, a positive development in this weekly. Don't forget, this is a weekly chart of sort of a higher low that formed here at the bottom of rally 5. And you got to squint to really see it. It's really close, and a higher high at the top of rally 5. Now, we kind of just moved off the top and right into that area of 4,000, 3,900 and change. We're holding, right? We're holding there. There's a long-term trend line on the weekly, the 200 week at around 37 and change. And we didn't even get really close to that except for the bottom of rally 4. But what happened here is we also found the 55 EMA. That's the weekly 55 EMA as well. And so right around this area, again, we had to squint to kind of see these. It was an area that we thought might be support. But more importantly, looking at the bullish percent, again, the bottom one is the S&P, the middle one is the NASDAQ composite, and the top one is the New York composite, BPNYA. And all of the indexes had a bullish percent improvement last week. So I'd like to see the validation. I'd love to see the S&P get above some recent levels of the highs here back at the end of January. We saw a couple of good bullish percent bars on a weekly basis. And maybe that's just starting here, and we'll see that increase. So at the beginning of this week, we're seeing strong bullish percent on these major indexes. And obviously, we've seen some support hold as well. All right, as promised, I said I'm going to look at some of the bullish percents on the sector level. And, this may not be the traditional way to look at bullish percent. I kind of like it, though, because it kind of just gives me the view of a typical chart. I mean, they're candlesticks. I could probably just change these to a line, and it'll be a little bit better. And I'll probably do that on all of them. So, when you get a little tutorial here on how to use this system. So looking here, right, at this, the consumer discretionary, the high level of 87. Imagine that. Consumer discretionary up to almost 90% with a bullish percent reading, and has come down to about 40 now. Look, I subscribe to some of the old methods of using point and figure and bullish percents, and on major indexes, the 20 to 30 level is really oversold, and the 70 and higher level is overbought. But on the individual sectors, you can kind of create your own rules. And not so much create your rules, but just go back and look at history and see where they did get oversold and where they became overbought. And the consumer discretionary didn't, surprise anybody, right? At that high level, it turned over. So kind of seeing that. I want to look at energy because I've seen energy. We have seen a trend change in energy from the relative strength change. And again, it's not a very dramatic move in the last couple of weeks, but coming off that 30 level again, which was typically oversold the way I learned it, moving higher. And obviously, where was it when it was overbought? Around 79 or 80 or so. And it was there prior as well, which is back in October. Well, and that's when kind of the market bottomed, by the way. And so a lot of these sectors that were doing well were sold. And obviously, some names like the discretionary were bought. So you saw one go down to a level of almost only 16% on the bullish percent, and right back to 80, all the way back to 30. So it's been a little volatile from this metric, but I still think, there's an opportunity here. We're just cautious now because we've seen a relative strength change overall looking at the XLE. So again, I just, heed that warning of relative strength on our system because I think it's important. Let's look at technology. We all like tech. Let's take a look at that. I'm going to change this again to the line chart. And you can see a similar back and forth movement. Now, I subscribe to the idea that because a lot of these stocks are in a clustered sort of very small range bound setups, you're seeing these bullish percents weave in and out of overbought and oversold so closely. And so they're so sensitive because the prices are so close to the 200-day, that's basically used to kind of formulate that bullish percent level. And so you're seeing this move up and down above overbought and oversold. And so here, when you get oversold around the 16 level, very similar to what we saw in energy at the end of the year, and then all of a sudden, boom, things kind of turn. So I think that people are using these pullbacks as opportunity to build bigger positions for longer term. And that's not a bad thing. So that's, typically a bullish setup. The industrial sector has been doing really well. I just want to look at that real quick. And again, I'm going to change that to a line chart. And being oversold there back in October, again, that was sort of the market low as well. Had a big rally back and has since kind of stabilized between this 50 and 60 level. So that's interesting too. So I like the idea here of kind of looking at these bullish percent ones from the index standpoint. You can easily do it. Just look at the dollar sign, and these are the symbols here. So pause the video and kind of write them down and go take a look at them. Okay, I talked about the ETF rating and looking at how it's kind of built, and I'm just going to give you kind of a quick tutorial. If you look at the technical rank here, now this one happens to have stocks in its underlying portfolio. This is a good example of one that's fully being used from the power gauge standpoint, taking all the measurements of the stocks inside the ETF and sort of weighing them against each other. But we do a technical rank, and it's a proprietary ranking strategy where we take the technical strength of this ETF relative to all U.S. listed ETFs, okay? Not just similar or like ones in the same category, all of them, all right? So we're looking for a pure technical move versus all the other ones. Now, U.S. equity PGRs, weighted and unweighted. So we take a view of the PGR's power gauge rating, and we look at the aggregate of the ratings held in this ETF, used in the ETF rating model. That indicates the aggregate power gauge ratings of the equities held by this fund. All right. Then we go one step further and look at the weighted categories. If this happens to be an equal weight, it's equal weight. If it happens to be a cap weighted, it'll be cap weighted. So the ones that have the higher market cap will get more of a vote if they're bullish or bearish or neutral. All right. And it'll change that rating underlying. So that's kind of how we do it. And this particular one is the Davis Select Financial ETF. Looking pretty good. We got a relative strength buy. It's oversold. Great relative strength. Money flow has been steady. You got a lot of positives here. Expense on this ETF is a little high, but if that's not your concern, you're looking for growth and a nice dividend. This one actually is signaling some interesting setups here. Let's just look at the other ones. I didn't pre-screen these or anything. I'm kind of just looking at these on the fly, and you can see this one's got a lot of assets in it. It's 1.6 billion. Also 53 percent. 53 basis points expense ratio, not low, but I guess you can buy one cheaper, but you'd have to look at what First Trust is doing. They may be picking different, maybe a different strategy inside the CTF. But again, on our strategy, look at the bullish percent on this. I'm sorry, the relative strength on this. I'm sorry, I'm thinking bullish percent, but look at the relative strength on this, and kind of looking at the trend of this particular one for utilities. ETF. That's pretty good. I think it's interesting. I'm going to go look at ITB here. This is U.S. home builders, which have been on a tear this year. And really, the relative strength started to change back here in November when a lot of things did. That was the peak of the U.S. dollar. The rollover really kind of became a tailwind for equities in general. But there's your getting oversold with a strong relative strength, strong money flow, and we're getting a relative strength buy rating on this. Now, this is a lower expense ratio. A lot of assets in here. This is the iShares U.S. Home Construction ETF. It trades pretty heavily and doesn't really pay a big dividend, but you're kind of all systems are go here. Very bullish on all of our settings except for the U.S. equity PGR one. But here's where that weighted PGR gives you a different feel and a different look, okay, and a different understanding of what's happening in this particular fund. The ones that are heavily weighted are pushing this to a very bullish setup. So also a good setup. We like the ideas here. I'm just going to go jump to a few other stock ones, and then we'll wrap it up. All right, just jumping in here. This is a list that's automatically generated by our system here, and it's the bullish estimate revisions, right? And I'll just go look and give you the exact definition of this. It's basically stocks with a bullish estimate revision alert today. Okay, so it likely happened last week or when the last time we ran the data, which would have been probably by Friday, potentially Saturday could have got in, but you don't get a lot of upgrades over the weekend. You get a few here and there, but not a lot. So this is just showing us names that are obviously getting a look from the expert part of our factors, okay? So bullish estimate revisions, okay? And so that's kind of what we like to see. We know that a lot of these names are fueled by analyst ratings, estimate revisions, call outs, conviction buys, things of that nature. You name it, there's a name for it out there. Now, this one's getting an upgrade. Construction and engineering, we're just looking at ITB. We saw the ETF was doing well. Here's one that's getting an increase in estimates. So start to put two and two together. And again, that top-down analysis can get you down to some of these names in the same industry where a lot of ETFs are moving. And you're getting, now this was a pretty big spike here, had good earnings. It's kind of overbought, but it's nice to know probably a better opportunity for a watch list than maybe an entry. And obviously Broadcom coming out with great earnings last week. We've got a momentum breakout signal on it. We got a strong stock and a strong industry. We're kind of oversold, coming out of an oversold setup, but tactically it's kind of overbought anyway. And the relative strength changed really early on this, back at around 500 and change. Stock's trading at 640. So, do the math, 140 on 500, pretty nice move from the relative strength change. And CNO Financial Group is an insurance company here. Another one. Now, this one's kind of better set up. It's kind of in the middle of the band. Strong stock, strong industry. Don't forget earnings coming out, maybe not until May, but they just released here and they beat. So a lot of good metrics here. Interesting market cap, only about $3 billion. They're doing a lot more revenue, so that's an interesting price setup. If you look at financials, see price to sales is kind of neutral based on insurance companies. That kind of does an industry peer look, but we're getting estimate revisions in here. Estimate trends very bullish. Insider activity is very bullish. Short interest is kind of waning, and the analyst rating trend is creeping to the bullish side as well. So a lot of opportunity in some of these names here real quick. And one thing I wanted to touch on was the XLE here. We're seeing a relative strength change to the negative side, and I just wanted to make sure we looked at that before we ended today's video. Not calling it out, but the trend is getting weak. I'm just saying that it's not something you should short or sell or anything. Just be aware that our relative strength has changed to the downside. All right, folks, that's all we have for this week. Thanks for tuning in. Again, I'm Pete Carmasino here at Chaikin Analytics. Follow me on Twitter at Pete Carmasino. You can find me on there. I put out some things once in a while, but follow me there, ping me, say hello. I'd love to have you as a follower. Take care. We'll see you next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.